Hi, this is Dr. Jennifer Mary, Assistant Professor, Department of Vocation, BFSI, Holy Cross College. Today, I'm going to tell you something about investment and its avenues. We are going to see about the term investment, to understand the objectives of an investor, to identify the various real and financial assets for the purpose of investing, to analyze the various investment avenues. To break down to the definition of investment, from the words of Donald E. Fisher and Ronald J. Jordan, investment is a commitment of funds made in some positive rate of return, the investment which has been properly undertaken. Now let's say you buy a car. Here the car is your asset. The value of this car keeps on decreasing year after year. One fine day when you finally want to sell a car, the money that you received will be less than that you paid for it. But what if you have invested the same amount of money in the company that built this car? With time, the car business also grows, and fortunately your money also grows. Now let's move on to the objectives of investment. First, you have return. Always an investor expects some positive rate of return out of the investment made. Second, capital appreciation. Capital appreciation means the amount must be appreciated to the value which has been gotten from. One of the major objective of this investment, the purchase of one property at the right time and the ideal stock growth ensures the appreciation to the investors. The second one is the safety. Here the investors are always looking for the safety aspects so that he finds it not the money invested not to be lost. The next one is liquidity. Liquidity here refers to the degree of encashability. Every investor prefers investment which offers high liquidity. Then we have hedge against inflation. Hedge against inflation is seeking protection against inflation. Inflation affects on the rising prices and a fall in the standard of people's living. If the investor foresees any irregularity of return in investment, he will decide not to invest it. So these are the various investment objectives. Now we'll move on to the investment alternatives. Here the investment alternatives are categorized into three parts. First one we have real investment, contingent investment and titular investment. Let's break down them one by one. The first one we have under real investment is gold. If you ask your elders which type of investment is best, they will immediately tell you buy a gold or buy a house. The same way, gold stands a primary fixed asset and acts as a security firm. It also acts as a reservoir when times of emergency, you can go pledge the gold and you get money out of it. The common form of buying gold by Indian households, they go buying for jewelries or they buy gold or in form of bars. The next type of real investment is real estates, where this kind of investment is in physical existence and tangible in nature. Here in India, real estate market is being grown exponentially in terms of financing and in investment opportunities. It is a booming sector in India as India has rising population and in economic growth. Okay, the second form of investment is contingent investment, where the investors are able to get insurance facilities. The typical example of this kind of contingent investment is insurance. The important features of contingent investment are that the value is related to the contingency in form of death or injury or any accidents. If contingency arises, the policyholder will receive a substantial amount of money from the insurance company as compensation. If no contingency occurs, the money paid towards this premium amount stands as an unexpected expenses. This contingent investment carries a lot of advantages also. The first one is protection. Here, protection against the risk of early death. The facility of savings. It facilitates the insurer to make payment according to their preferences. Either it can be monthly, once in 2 years or once in 4 years. This next one, it is highly liquidable. Liquidity here speaks about as it has a surrender value. Anytime the insurer finds to close the policy, he can go surrender the policy to the insurance company at a predetermined value upon the amount of insurance premium paid so far. The next type of investment avenue is titular investment. The bank deposits are of few types. The first one is savings bank account. Around millions of people in India trend to go for savings account. Even if they have a small amount of money, they tend to keep it in the bank as a safe return and which earns them a minimum amount of interest. Second one is current account. Current account is accessed by the business people. It is a running account because this account is operated by business professionals, corporates, industries, etc. The amount deposit is withdrawn and paid in continuous basis for business operations. The next deposits we have recurring deposits. The investor pays a certain sum of money every month for a stipulated period. After the time lapse of period, the amounts accumulated in the account plus accrued interest will also be paid back to the investor. The next one we have fixed deposit schemes. In this scheme, fixed deposit is a financial instrument which is offered by the bank that allows individuals to deposit their money for a fixed part of a period at a predetermined rate of interest which is gradually higher than any of these accounts. Then we have postal savings. Post office savings here are government backed savings options available through a postal system. They are designed to provide small scale savings and investment opportunities to individuals. These schemes are considered safe and reliable. The next type of titular investment is provident fund. The provident fund is generally called as a retirement fund, wherein a stipulated sum of amount is deducted from the employer's account for every month, wherein he maintains them in a. The next type of titular investment is provident fund. It is also called as retirement benefit scheme, typically established and maintained by the employees, allowing the employers to contribute a small part of the salary towards this fund. This contribution is made by both the employer and the employee, which is designed to provide financial security at the retirement of the employer's performance. The next type of titular investment is the equity shares. Here, the equity shares represent the ownership in a company. Shareholders holding equity shares have ownership and can also vote in the company's meeting. They also have a potential to receive dividends, although they are not guaranteed or not paid out in the company's profit. The next one we have the sweat shares. Sweat shares are shares which is issued to the directors or employees as a form of non-monetary compensation. Next we have non-voting shares. As the name suggests, the owners of these shares do not have any voting rights, but the company's decision process. These shares often have different characteristics but generally have limited to no voting rights attached to them. The next we have right shares. These types of shares are offered only to existing shareholders the right to buy additional shares in proportion to their current shareholdings. The next one we have bonus shares. It is a distribution of shares in addition to the cash dividends. Then we have the preferential shares. Preferential shares are they have a preferential right wherein the company's income is limited and they receive a fixed amount as money as dividend. Then we have the blue chip shares. Blue chip shares are the shares which create market leaders. The next type of titular investment is debentures. Debentures are long-term debt instrument which is issued by corporations or governments to raise capital. To those who buy debentures, essentially they lend money to the issuing equity for a specific period. In return, this issuer pays them the fixed interval as a rate of interest. The next one we have bonds. Bonds are the long-term debts. Bonds are long-term debt instruments. These are similar to debentures which is issued by the government, municipalities and corporations. They also form as a debt instrument through which the issuer borrows funds from the investors for a fixed time period at a fixed rate of interest. The next titular investment we have mutual funds. Mutual funds is a company that pools money from various investments and invests that money in securities such as stock, bonds and short-term debts. Here, the corpus of fund is managed and invested by investment professionals known as fund managers or portfolio managers. SIP, Systematic Investment Planning. SIP is one of the best feature of investing in mutual fund. That means which you need not have a large amount of money to start investing it. Most of the funded house in the country allows investors to begin investing in little amount of money. Let's take down an example of this. Let's imagine you invest 5,000 rupees every month for 15 years with a 12% rate of interest, where you receive a corpus after 12 years for 25 lakhs. This is a big amount. Likewise, in roughly it is the 4 times additionally to the amount that you have paid. The same way, if you do the same for another 25 years, your corpus goes up to 95 lakhs. So this can give you a expected extended investment window to increase your returns. The next titular investment is government securities. Government securities are financial instruments issued by the government, typically the national government, to raise funds for various governmental purposes. The major features of government securities are safety. The government securities are issued at risk-free investment, hence it comes under safety aspects. It is also a regular income, wherein the securities provide regular interest payments. Diversification. The government securities can diversify an investment portfolio by reducing the overall risk factor. The next one, we have liquidity. These securities can be easily bought and sold in inventories in secondary market, ensuring the liquidity for its investors. The second one, we have in the tax benefits. Certain government securities offer tax benefits such as tax exemption on interest rates. These are the various assessments, FAQ questions, references. Thank you.